And Chris, was there anything on Bookmap or your tool that might have predicted this drop? If we establish the theory that liquidity is a magnet, if we believe that, if we can prove that, then the only possible way for the market was to trade into 79. We have, although we have here possible liquidity at 90, but the most probable target, first target, at that moment we don't know whether it breaks down or that was a message, that was a news or whatever it was, it doesn't matter. The most probable outcome, Chris and Ramo, to me would have been this liquidity here at 79. Because market needs liquidity to transact. Market needs liquidity to transact. And this liquidity was in the book for since here. What is this? 10:10 Eastern Time. You see how they added liquidity at 75, even if the market traded into 84, 85. It's hard to believe, guys, I know that. It's hard to believe. We are relying on microstructure here and see what the microstructure is telling me or telling us. But the liquidity was there at 79 and the liquidity was there at 75. So if the theory is right that market needs liquidity to transact, then that will have been the trades, the targets for the day here. Some comes very nicely into this institutional level. I don't know what happens here. Yeah, as well here.
Walter?
Yeah.
Walter?
Yes,
I would only like to add that I agree with this. If you look, for example, an hour in advance or at the open of the market, if you zoom out, you see the big and the high liquidity levels, and that's where they tend to go. And the stops are usually an indication of the spot where they might make a go for it or where it might actually break through. Sure, longer term, you always have to look at the high liquidity levels. And don't make the same mistake as I did. I lost some money with it. That just thinking, okay, I place my order to go to the level with the high liquidity, because it doesn't always work this way. But statistically, the odds are with you if you bet on it. But don't go blindly all in.
Yeah, thank you, Dwight. Yeah, that's it, guys. So just it is like a map. It is like a map. So you start here and you see this might be the target, but the market makes us very hard. In other words, if you see here, okay, they must go to 70, the market must do nothing. So these are the levels of interest for today. It took 1.5 hour, more than 1.5 hour to trade into those levels. We don't know how fast this market or the move will be, how hard it will be, but it is really something we should keep in mind. And therefore I'm stressing this dome, I'm stressing the liquidity, I'm showing you how important it is to get the first impression, the overall picture. And in the second part, we will add the correlated markets to that picture. And you will see how genius this approach is. You don't need to go into micros and see, okay, there's an iceberg. This is another, Ramo, this is another discussion we will lead to controversially, because I know the opinion of my colleagues at Bookmap, and we have a different, based on our backtesting about icebergs. So there are big differences, but anyway, just we will still, Ramo, we will still be friends. Be sure.
Yes, I know.
Yes, I know. And one last thing I would like to add, and the rest I think will come back later on. But of course, also there are easy days and there are difficult days. Sometimes you only see liquidity above or only liquidity below, and then you know the way it's highly probably will go to. and some days you see liquidity all over the place, and then that's a hard day to trade.
Absolutely.
So, yeah.
So go, just for your information, for your documentation, and when you're coming back, if you don't know what means LTHL, STHL, it's long-term high liquidity and short-term high liquidity, and so on. Just keep it in mind and refer to the documentation. I would like to come to the liquidity tracker because it's the heart of the trade finder. It's not an iceberg. You know, everyone in this world, on this planet, if he is able to program, can do icebergs or program icebergs. That's really nothing special. You have to have an understanding. There are a lot of papers outside, thesis outside, how to code or how to program icebergs. This is really nothing special. So don't believe that iceberg is really something you should have. But what we, and therefore I'm stressing that, is that this liquidity, by the way, see this dynamic iceberg development that gives you back few points. We will talk about that. Let me make a screenshot because it's so interesting.
Walter, one more observation I want to discuss on the liquidity before we move to icebergs. Can you go back to the ES again? The big move that occurred. Go to the some more to the right, please. See the at 1600, the liquidity. Keep coming to the right from there. Keep coming to the right, please. And then see there's a drop. See that they were adding, and they added the big patch on the bottom. They added the big. So can we get some clues that the market is kind of going to the downside?
Yes, we can. When you experience, you see that we can. Because, you know, this guy who is playing with this amount of contracts here. Let me just see what was in the book. Therefore, the book is precious. 500 contracts, 537 contracts here. So, just let me another, just a moment. Let me see. You see this book map introduced this, how it's called, large lot tracker. You see this small vertical line here, 544, and there's small white line. That means this is an order which most probably belongs to a big player. Let him call big player. Let him call him. So here's adding, let's say, 400 contracts here because he is well informed. There are a lot of theses around in the internet. If you have time, read about informed trader. And then he placed, let me say, 400 to 500 contracts here at 46.80, and then the price approached the 80, and then he cancelled. You see this clear cut here, and dropped his order to 78.75. You see that? That's a language, guys. That's really something he wants to tell us. He wants to tell us what really happens in the book right now. That's a language. We must learn this language. We must understand that, as Raimo said, that was liquidity. We don't know when liquidity is coming back. It can go against us. It can go further up into the 90s, and we are still sitting maybe short because we think this is the target. It can go immediately against us for 10, 20 points. It doesn't matter. Those guys who are sitting there and waiting, they have another time frame than we, and they have maybe bigger pockets than we. But this guy here dropped, and that's what you say, Srini. And that's a language. That's something that's a real-time signal. You remember the first when I mentioned the first paradox of indicators. That's an indicator, but it's a real-time indicator based on the best data we can actually achieve with rhythmic MBO data. That's really amazing, because Ramo, Srini, Levi, whoever here in this room, Bridge, when we understand that, we see, okay, guys, we are sitting here in the room together in the trading room, having fun and watching this, and suddenly that happened. And every one of us individuals here in the room will understand that this is a sign that the market is going to trade against 78, 75. And it did. There was as well the gap. I think it was 78, not sure. But I think that was a gap. That was a sweet spot up at this point. So trading up into this liquidity, and then the liquidity remained at 78. So what we should keep in mind is, and I would like to hammer that in your head, is liquidity is the blood of every market, and liquidity is the leader, and every single transaction, every single contract needs liquidity to transact. And that was the outcome. We couldn't say that this is really going so badly down, so fast down, but we had some indications thanks to your idea, Chris and Ramo and Srini and all of you here.
Hey, Walter, also, I don't know how much you pay attention to the developing point of control, but if you go back to that area, you'll see that it shifted down as well. So
yeah.
So it shifted down. You know, you're further along. You see the liquidity has dropped. You see the point of controls drop. So it's giving you an indication that it's good chance it's going to head south.
Yeah, that was the best chance. I'm telling you what I'm telling. The best chance is these liquidities. They have been there all the time. The question is now, where can we get a sweet spot to enter the market? I mean, I would have been long here because it was a gap. I will show you the price dynamics plot, and that was a good start, as well as here. If you are very short-term trader, you're trying to get some points and ticks out of the market. We'll talk about this price dynamics plot. But then here it became very nasty. So you see that. So the point of control. And by the way, what maybe I forgot to mention is I have the volume profile here as well on my chart. So if you're following volume profile, if you following Dalton and Steidelmeier, and I think the most important one, I would recommend to have a volume profile on the chart as well. That's it's free. It costs you nothing to add a volume profile to your chart to get at least a clue where the point of control of today is. And when you know how to look at the volume profile, it's a normal distribution day, double distribution day, whatever it is, you will get the information on chart, because it's still there. You don't need to spend money for any expensive programs, since you have the only exception when you have Sierra or Ninja or whatever, it's still implemented in the program. Iceberg, Levi, iceberg knots we'll see on dome level. Not sure what you mean. On dome? No. So I suppose you, Levi, I suppose you mean following that we can maybe see the icebergs in the dome here. No, it's at least I don't know. I'm not aware that there's any program we would show icebergs on dome. We will see icebergs on the chart, native icebergs as well as synthetic icebergs. Yeah, that might be. It depends to Chris as well. I would be very, very cautious. We can't we will discuss this. We need market by order data to find real icebergs. Otherwise, every other iceberg is a synthetic iceberg. Because when you don't have the information in the order ID, in the data string, this providers delivering or providing to us, you can't find an iceberg. Therefore, Peter Davis is really going against icebergs because it's hard. You have to have rhythmic data to find native icebergs like here. That's an extremely well iceberg which started here and then got a fill here at 75. We'll talk about this a little bit later.
Well, that's what,
Walter. Are you going to cover some basics of icebergs? I got some really confusion.
Okay, we can do that when we come to the icebergs.
Please, yeah.
Please, yeah.
Oh yes, liquidity tracker. Let me show you the liquidity tracker because it's simply a genius tool. No, let me. Liquidity tracker. Yes, liquidity tracker here because what's most important of the liquidity tracker is the relative liquidity, absolute liquidity, and we added the price dynamics plot here into the book because we talked about the market volume, average liquidity, and the live view. A live view is simply you can have the live view of ES. You can add the live view of NQ. You can add the live view of SPY. So you can have literally hundreds of live views here on your chart, and then you can see the correlations between SPY, ES, and Q. We can add QQQ.
Nee, ik moet eerder volgen. Je moet eerder volgen.
Oh, if you are, I have to mute you because there comes some sound through. Now you see this is part of liquidity, and you know liquidity and volume is important. Now you see very nicely how SPY behaves, how the ES behaves in correlation to the SPY. You can watch the NQ and QQQ and have an idea when QQQ is leading, then NQ will rise, and vice versa, as well SPY and ES. That's a part of the liquidity tracker. So you can have literally 10s, 20s, or whatever live views on your chart. But what's most important, we talked about that, is that we have relative liquidity and absolute liquidity here in the implemented, because we the TTW trader, TTW team, we think that this information is extremely important because it indicates, let me show you again, we talked about that, when we see this 4690, then we see a relative liquidity is added. Let's have a look at 4690. And therefore, you know, guys, ladies and gentlemen, it's really hard to understand the liquidity concept when you don't have the DOM on your chart. I mean, you can leave the DOM apart or away from your chart. As long as you understand the liquidity concept, you don't need the DOM. But what I just want to demonstrate here at 4690, you see 289, 290 at 4690. Look, watch what happens. 290 at 4690 here, where my cursor is. You see what happens? Bam. This 290 jumped to 390 at 4690. That's a relative liquidity change because 100 contracts have been added to 46.90. What does this mean? What does this mean? When yeah, so
Price may come there.
yeah, might be, but that's speculation. But what is the hard fact? What is the hard fact of this hidden liquidity changes when we see that, or when we notice that 46.90, 290, and then suddenly it jumps to 390 by this indication? What might be the hard fact? Why I'm stressing that?
You can trust this liquidity. If they're adding, yeah, so you can trust this liquidity. So sooner or later it will be hit it, probably.
I understood only you can't trust this liquidity, and what else?
Yeah, no, nothing more. You can trust it. It's not
Ask liquidity added.
Yeah, so that means following. When you look at a book, you see all these signals. And that means that the big players, or let me say whoever is playing that, adding liquidity is does not happen by chance. All this stuff here is intentional. When you see as an example, 100 here, and then what happens here? He cancelled 50. There's still some liquidity here, which is at the moment, what it is, 350, but he cancelled that. This is something what this guy is telling us, what this guy is going to tell us. You know, when we are trading that and trading here and we see 100 coming up, that might be a sign that the market will go back here to this, or might trade into 46.90, and we see as well 300 here. But what happened is simply that the market broke down for some reasons. I don't know. We don't know at the moment. And then he cancelled as well. He cancelled here and here. This is a language of the market which we should know. It will give us more information than not. So what I'm watching is changes more than 100, but just for the purposes of demonstration here, I set a liquidity tracker to 50. And when you are using TradeFinder, you set a liquidity tracker to 50 or 60 or 100. Then watch for the changes in the DOM which are away 20 ticks. That means 5 points from the best bid offer. 80 means 20 points from the best bid offer. That means TradeFinder liquidity tracker is tracking all the liquidity up and down. To the upside, 20 points to the upside and 20 points to the downside. And then that's the point. That's simply the amazing point. You will see all this liquidities comes up and will signalize you, okay, there's one guy who is playing with the liquidity here. He wants to be traded maybe here. If not, he is cancelling, he is layering, he is adding to different liquidities. And that gives you a clue what they are trying to do. Like here, green means on bid. Green means on bid, and that's simply support. That means if they are coming down, they most likely are supporting that. You see they're adding here and then cancelling here. This is a language. This is a language you can use with a liquidity tracker, as well as the absolute liquidity is a little bit different. It's a little bit different, as we talked about right here. Yeah, that was the example here. Excellent example. Again, you have to have the DOM here. But when you see this, you know, the problem with trading, when you are staring at a chart, when you are looking. Then you have the Bookmap maybe open, then here you have your NinjaTrader open, your NinjaTrader chart, 10 minutes, 60 minutes, 5 minutes, 1 minute, whatever chart you have. Then you're watching on the NinjaTrader or Sierra chart, it doesn't matter. You're watching your normal condition, normal chart, and then you have Bookmap on. It is so overwhelming. All this information is so overwhelming, so too much to watch, too much to be focused. And that leads simply maybe to overtrading or whatever. And you are missing all the signals because no one will tell you that this is really something important. And the absolute liquidity here happens really very fast. Maybe his intention was to trade 84.50, but then he jumped to 84 even. Maybe this is the same guy here who traded 84.50 and then lowered the liquidity at 84 even here, 84 even. And then suddenly he cancelled here. By the way, the point is valid just to save plus and minus here as well. These are absolutely changes because the absolute change was 1000.
Walter,
Why he would have cancelled that? He placed it.
Yeah.
I'm just.
I don't know.
What was the reason?
I don't know. I don't know.
Sorry.
Yeah.
Can you hear me?
Yeah.
If you go back, then you can see really clearly why. Because he was accumulating the long positions there. You can see like it's a kind of a spoofing. If you make it a little bigger, you can see underneath there the yellow one under 652. There's like really. You see the 652 orders. You see 1044.
Yeah.
Zoom in there, like you see the yellow one
here,
on
yeah.
the ask side.
Exactly.
Mhm.
Exactly. That's why.
Good point.
So what's that?
What's that? I'm sorry, I didn't get it. Sorry. So yellow one. So
Argo, can you repeat it, please? Hello?
So yeah, the intention there might be like he was accumulating the longs there and or wanted to get out of the position. There's two options, and he was wanted to get the price, and that's why he was holding on the price there. That's why.
What Srini, I think he's saying that he is trying to accumulate here at 83.50, right, Argo?
Yes, or get the shorts on or whatever the intention was there, but he wanted to get at the price and the whole price up there, and that's why it was this action there, with this limit orders.
Okay. Yeah, can be. I can't comment that. So it might be. This might be. You're saying that he is accumulating, then simply lifting, trying to keep the price lower, 84, and then he wants. I understand. Maybe he wants to accumulate here at lower prices to trade them higher.
Yeah, correct. That was my.
Okay. I see what you mean. I see what you mean. So your idea is to saying, okay, based on this liquidity, this guy who he wanted to have lower prices to accumulate, then he is blocking the upside here at 84 even, and then simply he got what he wanted. Maybe he got what he wanted. I don't see that, but anyway, just to have the idea, and then they are traded into 84.50 here.
So
he wanted to buy at that 82. So he kept the market down.
He put a lid on the pot here and trying to get lower prices to accumulate and then trade higher. That might be a reason for that, but yes, that might be a reason for that. So good point. Here and here, yeah. Okay. Where have we been here? And by the way, the next point for those of you who need more signs what the market is doing. When the market trades into resistance or support, like here, let me take this one. Then maybe Raimos, do you have here some signals here or whatever on the SI tracker? I'm not sure, but when the price trades into an,
Let me check. Yeah. Let me check.
Into 67 in this case, then we introduce the price dynamics plot. The price dynamics plot is simply based on the aggressors and the liquidity. This is what we see here, what they are selling into bids and what they are buying from ask. We're trying to visualize this behavior because it is extremely hard to follow these numbers here. It's important to watch it and to see what happens under certain liquidity levels. But our intention was, how can we bring this technique of the order book, not based on numbers or whatever, but in a visual style, to give you a guidance, to show you in a blink, in a moment, what the market is doing. We called it price dynamics plot. And you see in this example right here, you see this big red sign here, bullet. This is, yeah, the intensive the color is, the intensive the color is, the more volume was traded at this point. That means this dark red bullet means that this is a high volume traded into this level. And when you zoom in, so we are sampling because that's how we are relying on Bookmap. That's really hard to code and to make it visible. We are sampling. We just optimize the price dynamics plot to the futures, especially for the ES future. You see how more and more sellers are hitting the bids, and suddenly they are accumulated here into the liquidity. We got a big red dot here, which means high traded volume. And then you see immediately that buyers came in control here. So that means this price dynamics is showing us, in this case, at that extreme point, that was an exhaustion of sellers. And now the buyers come back into the game and trying to lift the offer. Green, dark, no, it's not dark green, but light green, light red, because sellers came back, but really minor one. The force was not big here. The intention was not big. Then finally the buyers take control and the price goes up. Due to the nature of the game between buyers and sellers, it's impossible to make everything green, because this is a real-time indicator here. It gives you an idea that you can't short here, but you have to go long. It gives you an idea that this red bullet here, in this case, is a high traded volume, and it's not a spike, because when you, and that's the point I would encourage every one of you, if someone from Bookmap is telling you that's a spike or that's a stop run or whatever, zoom simply in and see what happens. Because the aggregated data in Bookmap gives you a completely different view of the market than in comparison when you zoom into the market.
Other. Some interesting thing I saw on ES. If you look at the screenshot that I shared, you see that the first one is indicative of a stop run, but it's a small one, as you can see. But if you look at the chart, and that's the second screenshot, some interesting stuff. There you see that this is a stop run for the low of the previous day around 9 o'clock.
Yeah, I see
You see
that.
that? That's the blue line. So they went for the stops just below this one, and when these things happen, it tends to be a sharp turn in a lot of cases, because it's a stop run where they shake out all the retailers, and then they go up and they sell it higher.
You see the stop run if you want here, but
It's especially interesting if you look at the chart, because it's very obvious.
I see what you mean.
They went a little bit below it just to take out the stops, and then they make a run for it.
By the way, you see that this is the same line here. I know what you're saying here. I'm really, yeah, I don't want to discuss this right now. You see that this is MVB.
No.
I doubt.
But I find the chart more interesting at this moment, because you just see that they go one tick, a few ticks below the low of the previous day, 9 o'clock, and then they make the big run, the relatively big run, and that's what they do all the time.
Yes. The question here is. I don't know. I don't want to argue here with the stop run. I'm very cautious with this stuff here. But anyway, I know that they are telling this is a stop run. You are looking at the 46.66 here. What is this? 46.50. Let me see it here. 60.50. There was a drop down. There was another drop down with a high volume. Yeah, it might be. So let it be. That's okay. We're with this volume spike. Let me see if we can find a volume spike for that, because it takes time. It takes 80.22 and 80.22 maybe 10 seconds or 41, which means 41 here. 22.30 and 40, that means 10 seconds. Let's see if we can find it. Excuse me, that's the wrong one. I'm just watching for the big spikes here. Let me see if we can catch that one. Price range was as well small. 68.50 to 67. Let me just find 4 ticks. But more than that, I wouldn't ever. Anyway, I would suggest to watch for this exhaustion, because that you'll see here, sell volume spike. You can drill down the numbers, so for every single of this spike signals, we call it SPY signals, because we use them as well for stocks. So what I have, a trigger volume of 300, maximum duration 1 second, and then price range at least 4 ticks, and the ratio between buy and sellers is 2. And that means we got a signal here as well. We call it spike signal because it spiked down. Whether this is stop run or not, that's something different. But what we see here is as well, we see the spike. We have this indication in the price dynamics plot, which shows exhaustion because of the high volume. It traded not exactly in the, maybe in the liquidity here. And then the price dynamics started to show green. And you can rely on that, at least for the AES E-mini future. You can rely on that. So that was a spike. The question is, what should we do now? Go short or go long, because we don't have anything here. And the price dynamics is showing we have to go green. There's a small pullback. We have to go green here. and then we have to manage our trade into 74. This is extremely helpful indication here, because when we see the spikes, volume spikes into a certain area, as well on the MVP you see the same one. By the way, Raimo, this is coded by Sergey from our MVP, or my MVP is coded by Sergey from Bookmap. And it shows you the spike down here. You follow the price dynamics. Price dynamics show you the real order book trading we would like to see when either the buyers are in control or the sellers are in control.
Walter,
in price dynamics, it shows the aggressors or the interaction of the aggressors with the
interaction between aggressors and liquidity.
Oh, it's an interaction.
Oh, it's
Yeah.
an interaction.
Yeah, it's not.
So it's not like it is not like all much aggressive.
No.
It is the
It is the interaction between aggressors and liquidity. That's the purpose of this green band of the price dynamics plot, because my philosophy is that we should maintain a clear picture of the market. And Raimo has here stop runs based on the SE tracker. We have the volume spikes because it took several seconds to trade into this level, into this liquidity level. And then the question is, what happens next? All this, the price dynamics is a kind of exhaustion. It shows you very clear. You can, let me show you that. You can play with different settings here. You can separate them so you see better maybe what happens. And you start to see that there are more buyers than sellers. You bias the sellers. So the transaction on the bid is higher, and they are supporting the price up than the sellers. There is nothing. You see white, a little bit red, white, white, red, white. But you see how dominant buyers are here, how dominant they are. You can combine them to put them together, or you can separate them, and you will see very nicely that they are leading. So given you are long 68, then we come into the next liquidity here, and then the price dynamics plot starts to show there are more sellers, there's more resistance here. There's more resistance. There are not enough buyers at this moment. That can change, because this is a dynamic order flow that can change. But see what happens here. Exhaustion, and every exhaustion, that was an iceberg of 3,000 here. That was a 3,000 iceberg at 75. It was it was long in the book. Yeah, of course, that was this dynamic iceberg development. Nothing was left. Everything was traded. 3,000 have been traded here. And what happens when the price exhausts? What happens? The price takes a break. It needs more buyer. Or the exhaustion is here. That's the first one. And the second one is here. So the price is, then you see there are more sellers than buyers, and then they're trying to keep the price down. It's a fight anyway, it goes up, and then they're starting to sell it again here because it's red, more reddish than greenish, let me say that way. That's liquidity, ladies and gentlemen. That we are talking about resting liquidity on the bid, on the ask, and we are talking about market liquidity. That's what happens really here in this on the pit. We are not aware of, or maybe not aware of, because we don't see all these actions here. Exhaustion, then it turns, when you see white and green, you have to go green. When you see red and white, you have to go you have to sell, you have to buy. Although you must be aware that's not a tool you can use every day. But you can try it with micros. It works very fine. For the ES, I'm talking about the ES future. we have some slightly problems with, not problems, issues with stocks and as well cryptos as well. Yeah, that's liquidity. That's volume and liquidity, guys. And you can have this help us just to determine the direction of the market. Still more selling than buying here. But anyway, as we discussed here, at that point we have had a nice volume spike into liquidity, indicated by the MVP as well as the trade finder here. And then it started to go green. There are no sellers here, so we have to take it long, 68. And the next level is 75. We will see in the correlated market how this turns out in the next days, or next, maybe tomorrow, hopefully. Any questions so far?
One last.
One last. So, can you go back to the chart, please? The V delta on the bottom. That's the pure aggressive.
Yes.
Right.
Okay.
Yes.
Okay.
This the V delta, or the market volume pro as we call it, are measuring simply the aggressors here, not the interaction between aggressors and resting liquidity. That's what we are not doing here. But it shows, and as said, that what Rhino is showing on the stop run file, it's the same as Rhino has on the stop run indicator from SE Tracker here. It's really there are hardly any big differences here because it's coded the same way. So if you think this is a stop run here into, then you see that was an iceberg 3000 traded as well here at this volume spike here we see here. There are, I don't know where, maybe some fine differences, but it's not much, because when you overlay or offset these two curves, you will see they are really similar. Good. Yeah, we talked about the liquidity meter. I just want to go again here. Why is it important? Because the volume and liquidity meter, you will at any time knows when and why a market stalls. There are no aggressors. So for our trading, it is important to understand that when there are no aggressors, there is no power, there is no energy to move a market into a certain direction. And when we see a high market volume participation, we must be ready. We must be ready to fasten our seat belts, of course, because the market will trade very fast in one direction. So either it goes 90-degree up, which means sweeps or high volume participation, or it takes some time. And that's what I'm saying. The market volume is extremely important to us, and as well the resting liquidity as well is extremely important to understand the characteristics of every single market. When we trade stocks, coming back to Tesla here, if it opens, then we want to find the spikes. We want to spy the sweet stops, or the sweet entries here. When we trade Tesla, we want to know where the liquidity is. We want to, maybe we are late and we want to catch this the swing highs or swing lows. Depends on. That's what we want. And to understand if the market is really in the mood to trade, I think we saw market volume of 50,000 or something like that. I can't remember even when we have a previous 15,000 here, when we have had a previous look. So that means that might be the average liquidity, market volume for Tesla right now. Not sure, but you will see 50,000 here for this. Let me see Microsoft. Yeah, that was another point. 1,200, and the average liquidity of Microsoft is 250 here. So every single instrument you are working with will have his own characteristics, and this own characteristics, I think, should be considered when you are trading a market. And I'm not a friend. I'm not a friend to see everywhere some numbers, but I'm a friend to watch this, to find the sweet spots, and then to trade. I want to be the first on the yes, or in the saddle when the market lifts off or starts to trade. And by the way, guys, few minutes ago I told you, or I mentioned that the market, that this price dynamics plot is more reddish than greenish here. So it's really hard for the price at the moment to trade higher. It's still more sellings than buyings. For those of you who are scalping, that might be an idea how to do. Okay. Yeah, we talked about the live view, which is quite important to see the correlations between markets like QQQ, NQ, yes, VXX we will talk about, and SPY. Okay, guys, the price dynamics, I talked already about price dynamics. I would like to encourage you to have a look at page 27 and 28. As I mentioned, the price is always driven by market buyers and market sellers. And the price dynamics shows you very reliably for the years. I'm not talking about stocks. I'm not talking about cryptos. Please be aware of that, because we are just examining and researching and understanding how to code that best for Bookmap. You know, it wouldn't be a problem. It wouldn't be an issue or a challenge. No, it wouldn't be a challenge to do this for NinjaTrader or Sierra, but in Bookmap it's a little bit more special. And therefore we are sampling the buyers and the sellers in the transaction between aggressors and limits, and then we are drawing, or how to colorizing or plotting this information in a plot. You can separate or you can combine, and then you get a very nice overview what the market might do. And this spikes, this greenish and reddish spikes here, shows you exhaustion. You might see, based on what you are using, what indicators you are using, you might see a stop run or whatever, a volume spike. But you see that as well here in this diamonds or these spikes here in this case here. Yeah, price dynamics is primarily developed for the ES future. It works with most liquid futures. It is not tested with stocks and cryptos. As I mentioned, it is an easy visual guidance for buyers who lead the market at any given time. It's unbelievable, guys. I'm not sure if you are using that. I would encourage you to watch it simply on the ES, and you will see that you will get the best information out of the market without having your eyes on the dome. So easy visual guidance, who lead the market in any given time, buyers, sellers, or it is a choppy order flow. Yes, indicates the actual market condition, buying or selling or sideways. And it is a reliable real-time indicator to determine or to judge the art of order flow at any time for a trading day. This is really helpful to see live right now here, how they are fighting with this area. More sellers came in, and then the buyers lifted back. Let me know, where is it here? No, sorry, I'm wrong here. Maybe I like the combined view because it's constructed to show you who leads more, the sellers or the buyers. So you see that very nicely here into this liquidity above. Good. Any questions so far?
On a thin market,
Walter, that dynamics is like NQ. It doesn't do that good job.
Yeah.
I noticed.
That could be so. Treat it. I would say use it for the ES future. Right now we are just doing a research because it depends on this dynamic price dynamics. Yes, you are right, Srini, is sampling the trades, and the less liquid the market is, the more hard will be to follow this price dynamics. So I'm using it for the ES at the moment, and we are discussing how to develop it for the thin liquid instruments as well, for the stocks. That's really an issue, and I must say use it for the ES, and be very cautious with cryptos and stocks with that. And as well, I never traded it with NQ. That's what I'm not trading NQ, so I don't know. But if you say that, that's okay. That's great. Hidden liquidity changes. We talked about that. We saw several examples about absolute and relative liquidity changes. Let me skip that because oh no, that's simply something interesting here. Yeah, that's why are we doing this effort? Why do we do that? As I mentioned, that's a screenshot of last Friday here. You see here on my chart. We want to know where the game players are in the game. On some days it's crystal clear. Excuse me. On some days, it's crystal clear what the market is doing. Excuse me. On some days, it's crystal clear what the market is doing. I will cut this out. So again, on some days, it's crystal clear what the market is doing, because liquidity is always there to manipulate the price in one direction. We can see hidden liquidity changes. We can see who is playing at what price levels he is playing. He's playing that. And that's of extremely it's an important, worthwhile, and meaningful information to see that. You see that how the lifted the changed the liquidity changes up into the 49 or the 46. I don't see that 46. So 1, 2, 3, 4, and so on here. It will give you a clue that there is a significant player in the market. As well, you will see how they're canceling, adding, canceling, adding, canceling, adding, canceling, adding. And you see all the way up what happens. This was the last Friday, by the way. This is nothing which happens without any intention. Although we don't know the intention of this market, and at every single second, we don't know that. We can't know that. We can't predict or anything. No, why is that happening? Because we don't have the information. We are not well informed. Maybe he is awaiting on news or on speech or whatever, and that's what tells us how the market behaves. And when you see the